Okay, so Shalia, I should start, right?
Yes, ma'am.
Thank you. Good evening, everyone. A very warm welcome to all of you. I am Vatsala Khare, lead of the mentorship program at the Startup Incubation and Innovation Center, IIT Kanpur, and I will be moderating today's session on unit economics and pricing for startups. Thank you so much for taking out time to join this session. And we are also streaming live on our YouTube handle. Before we begin, I would also like to share that this webinar is being conducted under the SBI Foundation's Leap Innovators for Bharat program, Innovation for Social Good. This is a collaborative initiative between the SBI Foundation, the CSR arm of the State Bank of India, and IIT Kanpur, which aims at building a strong incubation ecosystem that supports early stage and growth stage startups working towards meaningful social impact. Under this initiative, we are supporting startups across sectors like agri-tech, healthcare, and clean tech by providing financial support, mentorship, and access to IIT Kanpur's infrastructure, along with continuous guidance to help them grow and scale. Now, coming to today's topic, for many startups, especially in the early stages, the focus is often on growth, product, and customer acquisition. But very quickly, the founders realized that understanding unit economics and pricing is what truly determines whether a business can sustain and scale. It's not about how much you sell, but it's about how much you actually make per unit, how your costs behave, and whether your pricing reflects real value. We are happy to have with us CA Prachi Jain, our mentor and co-founder and Chief Strategy Officer at Ednovate Official. Prachi is an All India rank holder chartered accountant and brings over 15 years of experience across private equity, venture capital, and impact investing. She has also been involved in raising and deploying capital across multiple startups, giving her deep insight into how businesses scale financially. She is also a Goldman Sachs 10,000 Women and Bangalore alumna, an active mentor and advisor to startups, and currently serves as a treasurer at Wikiflow, further contributing to the broader entrepreneurial and business ecosystem. I'm sure her experience in working closely with founders on financial structuring, pricing strategies, and building sustainable business models will make today's session extremely valuable for all of us. With that, I would like to invite Ms. Prachi to please take the session forward. And a message to the audience who joined us, please make the session interactive with your questions. We have the Q&A box active, and in case anyone of you wants to have a dialogue, please raise your hand. We'll promote you to the panelist and you can talk to our speaker. Over to you, Prachi.
Thank you so much, Vatsala, for the kind introduction. And it's always good to be part of the SIC incubation panel discussions, jury members, EC. I think, in fact, I'm learning a lot on the way. It's mutual. So, hi everyone. Today we are here, and I think Vatsala very rightly mentioned that it's not about how much revenue you're generating, it's also about how much profitability you are making. I think over the years we have forgotten how important it is to make profit, to make your organization self-sustainable. We are only running for funding, like as if the funding from an investor defines that you are a successful startup, which is not the case. And I'm a true believer that if you become self-sustainable and create legacy businesses, that is what define you as a successful startup or an MSME, and not funding by any big names in the market. A lot of times we kind of always felt that, okay, I've raised funding, I will be a great startup, but I've seen those startups failing and the money of investors going down the drain. Having said this, let's just start why we are here today. And today I will be focusing on pricing, unit economics, and in that, what are the two models why we are referring to. And I think you all would have spoken about those jargons, and it's not complicated. It's very, very simple, I will say. It's just that ज़्यादा ही डरा देते हैं कि भाई finance है, ये है, वो है. It's very easy, I'm telling you. It's just that you have to put in your little effort, not great, but little effort to understand. It's pure maths. And I think if you are techie also, you can understand. If you're from any background, you can understand it. This is pure thing. And as an entrepreneur, it's very, very essential for all of you to understand these dynamics, these things, because ultimately you are running the business and you can't be dependent on all these metrics on somebody else. So let's just start. Just give me a second. Yeah, so this is about me. I think Vatsal has already covered that. I'm not taking it ahead. So what's finance? I've been talking a lot about it, and this is one of the slide which I kind of always love to talk about, is that we are in the business of managing our own money, which is crucial for sustainable and growth of the business. And what I say that because we are not running an NGO. If we are running an NGO, then I will stop it and I will say, do whatever you want to do. I am least bothered about it. I don't care because you are doing a very charitable stuff. But we are not. We are into the business. We are in commercial businesses, and we have to earn profit out of it. And where you need your effort is the art of managing it, and how you have to manage something, which we will understand as we go ahead. I think these are the key concepts which we will be focusing more on today, because finance is a concept which I can go for maybe a boot camp of 10 days, 12 days, 15 days, based upon how much you want to learn. But today we are focusing on CAC, lifetime value, unit economics on CM basis, and pricing. These are very important concepts for any business to start with once you have a product which you want to commercialize. So let's just understand pricing. Initially, I had a very different way in which this presentation was going, but today I thought let me start with pricing because that is very important. Typically, you set up a pricing based upon these are the various methods on which you do that. But before that, we'll understand why pricing is important, why it's not just about revenue, because it drives customer acquisition. So if you have the right pricing in place, you will be able to capture the right customers. So assuming if you have given your price of the product is assuming 100, and your target segment are those people who can actually buy that product at 100. However, if the product pricing which you have kept is at 500, that's where you're mistaken, because you're not in the luxury segment. You cannot charge 500 for a product for which people are okay paying 100. So you have to have your pricing near to 100 so that you drive your customers, and those customers needs to be right customer. So your pricing defines your customer acquisition. So be very, very sure about it. So if you are in a segment where your product is niche, you can command what we called as a differential pricing as compared to your competitor. But if your product is very, very similar to your competitor, if they are charging rupees 100, you cannot charge 200 rupees. You have to ensure that you charge somewhere nearby with certain differentiating factor which your product has. And then maybe it could be 105 or 110, but it cannot go to 200. So very, very important to attract customer. And that's why you are all into the business. You're all here to attract customers, have paying customers with you. Profitability, extremely important. A lot of times I spoke about 100 to being 110. In order to acquire customers, a lot of time we think that it is okay if my product is costing rupees 100, I will have price my product at 80, so then I acquire more and more customer. In the initial phase of the business, this strategy may work, but if it continues to be in this manner, you will become a loss-making company. And whether an investor would be making investment into your company or not is a question mark. So definitely you have to ensure that at very initial stage, you should have something plus. So what is the cost of your product plus certain profit component to it, so that you can define your pricing. So if you're making your product at 80 and if you think 20 is a reasonable profit margins which you can add to your product, 80 plus 20 is 100 at which you should be pricing your product. Scalability, very, very important. As you scale up, it's very important that you have the right price, because ultimately you will attract more customers. So as I say, pricing is not about revenue. Of course, it drives revenue at the end of the day, but it's very important that you price your product pretty well. What are the ways in which we can do that? Value-based pricing, as I say, price based on the perceived value to a customer. So assume you have made something which may be costing you 50 rupees. But in the eyes of the customers, maybe it's a sustainable product or a clean tech, they're okay paying 500 rupees in the market, you can definitely charge them 500 rupees. So something like a Merck or a Benz, the costing may be 100 rupees only, but there is a premium brand which is already created. People are okay paying 500 rupees for the brand. So it's based upon how much customer is agreeable to pay. So this is called as perceived pricing or value which a customer has. And if you have such kind of product, you can definitely charge a lot of premium for your product. The next is cost plus pricing, which is majority of the people do. You say 80 rupees ka product hai, 20 rupees is what I wanted to add, 20, 25, 30, whatever you want that amount be. And of course, you have to see the market dynamics as well. And I can sell the product between 100 to 110. That is what is we called as a cost plus pricing. Competitive pricing I spoke about, which typically means based upon your competitors, sometimes you have to reshuffle your pricing, because if your competitors, if there's a similar product in the market and you are costing it at 100, your competitor is costing it at 80, then you have to bring it down somewhere to 85 or 80. Otherwise, you will be thrown away from the market. Likewise, if they are putting it at 120 and you are doing it at 80, people may feel, oh, there may be the value of the product may be little deteriorated. So don't even undermine your value. Don't overmine your value. A lot of times it's based upon the competitors. You do that. You remember while we are selling a product, if it's a simple item during Diwali times, or there are certain times when there is a war which is going on, price war, everybody kind of reduce their prices. It's okay for a shorter time frame, but for a longer time frame, you can't be doing that, because I've seen the entire industry wiping out because the customers comes to a level where they're selling it at 10,000 when the cost itself is at 15,000. Happens a lot of time into the tech industry, a lot of technology industry, it happens. Like premiumly D2C tech industry, competitive pricing affects a company a lot. Dynamic pricing, as I say, typically if your product is such that you can pass on the pricing to the customers, then it is a dynamic pricing. Assuming the majority of your product is made up of steel, suddenly there is an increase in the steel prices. Earlier you are selling it at, last month, let's say you are selling it at 1,000 rupees, but because the steel prices have increased, now you will pass it on to the customer stating that the prices of steel has increased from 1,000 to 2,000. So now my pricing would be 2,000. So if you're in a dynamic or a versatile market, which is affected by lots of ups and downs, or gold, right? I can't say gold was yesterday 13920. Today also you give me 13920 when the price is 15,000, right? So you have to understand that the industry which you are in, the raw materials which you are consuming also defines your pricing, because if the raw material itself is a versatile raw material, or where there are a lot of price fluctuations, then definitely you got to transfer. Otherwise, you'll not be able to survive in the market. So this is very important for all of you to understand that it's not a very simple exercise to do pricing. It's very difficult. It's difficult in the sense that you have to put in a lot of efforts and your brain and talk to people what should be the pricing. Because I will say it's a lot of research work, because ultimately it's a number which you're putting in. You're not doing anything else, but that number needs to be defined in the right manner so that you get to the right pricing, which, as I say, is very, very important. Now, coming to topic which everyone has been talking about, unit economics, what it is nothing. Unit economics means ki if you are selling a product, assuming all of you are selling a product, I'm not talking about the service industry right now. All of you have a product. आप अगर वो प्रोडक्ट मार्केट में सेल कर रहे हैं, तो पर यूनिट पे आप कितना प्रॉफिट कमाते हैं? व्हेन आई टॉक अबाउट द पीएनएल में हम क्या निकालते हैं? पैट मार्जिन्स, प्रॉफिट आफ्टर टैक्स. That is for the entire company. I am earning that much amount, right? Unit economics says कि तुम एक यूनिट को बेच के कितना प्रॉफिट कमा रहे हो. That is exactly what unit economics is, and we will understand how to calculate it. You should all have those numbers in place. Even you can calculate it. It's, as I say, it's not rocket science at all. There are things which I may not be able to understand because these are very technical, but this is finance. If you just put little, as I say, effort, you will definitely be able to understand it. We'll understand two concepts here: unit economics and contribution margin. And again, as I go, we'll also understand what is a gross margin. So what is unit economics? As I say, it's per unit profitability of a unit, which takes into consideration all cost which is associated to a unit. Assuming the price of a product is 100 rupees, okay? And the cost to make that product is 50 rupees. I'm talking about the direct cost and the variable cost plus the fixed cost. Indirect cost, which means the cost which you are required to gather customer, which means marketing cost, right? I'll also speak about CAC, customer acquisition cost. But when you add all the costs together, as I've written, customer acquisition cost and cost of goods sold, which includes your direct expenses, raw material, labor expenses. आप जब सबको add कर देंगे, when you add all those things together, you get the cost. Assuming that cost comes at 85 rupees, okay? And you are selling your product at 100 rupees. I'm talking about one unit. I'm not talking about a lot of, it's one unit product I'm talking about, one unit. 100 minus 85 is equal to 15 is my unit economics, which means this is my profitability per unit. Having unit economics is very, very important because that will tell the investors, if you're going out and raising fund, that at the product level, you are able to get profitability from your business. So this is it. There is nothing more, nothing less. And connected topic or connected terminology which is being used by a lot of people is the contribution margin. What is a contribution margin? Contribution margin means that even if your unit economics is negative, but you are able to ensure that whatever you are earning from your company, your variable cost is taken care of. What are your variable costs? Write in the chat box. I don't know, I can't see the chat box. Can anyone write what are the variable costs? Vatsala, can I see the chat box? If anyone is writing, can I see that?
You can see.
What includes variable cost? Or if you could read out for me, if people are typing, variable cost are your direct cost, which implies that if there is a factory, then in a factory, a labor who is coming is a variable direct cost. Okay. However, what is rent? Rent is a fixed cost. It is a direct cost, but it is a fixed cost. Okay. Raw material, again, can someone answer? Okay, someone is answering. Can I read? So, logistics. Yes, logistics is a variable direct cost. Raw material is a variable direct cost. Labor expense is a variable direct cost. However, rent which you are paying is a fixed direct cost. So as I said that if you're able to manage your variable cost, not your fixed cost, which implies that you are still in a profitable position and you are able to manage your business pretty well, and that is what we called as a contribution margin. So as we say, revenue minus all your variable cost will give you what is called as a contribution margin and tells you that your business is able to generate profit to cover its variable cost at least. Okay. And when it is able to cover is both fixed and a variable cost, that is the point we called as the break even point. Right? A lot of times people get confused. What is break even? What is contribution margin? What is unit economics? These are very simple terms. You have to just divide it and try understanding these concepts one by one. So I'm sure you're able to understand contribution margin as well as unit economics. Example I've just given below, assuming the selling price is $100, variable cost is 60. So contribution margin would be how much? 40 rupees. Okay. CAC assuming is 30, then the unit economics profit is $10 per customer or INR 10 per customer. So that's per unit you are earning this much amount. Now, there are two methods to calculate unit economics. One we have just spoken about, ki revenue mein se per unit, you will minus the variable cost, divide by revenue per unit. Either it is a percentage, or if you do not want a percentage, that is your contribution margin. So contribution margin is just revenue minus variable cost. Contribution margin percentage is revenue per unit minus variable cost divided by revenue per unit. It's simple maths, which we all have studied in 6th standard. Okay. The second method, and which is the most talked about method for a lot of startups, because there are times when you're still at the POC stage, you're still kind of yet to commercialize, you have less paying customers, or you're still in that process of getting into that stage. And there we talk about, for complex businesses or for startups, the three metrics which you should definitely know is, what is the lifetime value of your customer? What is the CAC? What is the customer acquisition cost? And what is the payback period? I will first come to the payback period because it's a very simple term. Assuming you have invested 100 rupees in a factory, okay? And you say that this 100 rupees I can generate from the business in 2 years time frame or a 24 months. So your payback period is how much? It is 24 months. That's it. There is nothing more, nothing like आपने 100 रुपया डाला, वो 100 रुपया business कितने time में निकाल पाओगे is your payback period. In our example, we said we could do that in 24 months. So payback period becomes 24 months for you. Now coming to okay, so we'll just discuss that. Why unit economics break? Over leveraged CAC plus high churn, and we'll discuss both these terms. And freemium without margin clarity. Whenever, so there are a lot of times people have this SaaS subscription model and they say ki we want to garner or gather a lot of people on our website or on our app, and they started providing free subscription. That is also where the unit economics break, because you are not earning any revenue and there is no profitability which you are generating by kind of expending that amount of money on marketing or branding. Why unit economics matter? I think it validates your model कि ये profitable model है, per unit basis पे पैसा बन रहा है उसमें. Helps you in managing cash कि भाई operating cash आ रहा है, मैं 1 यूनिट बेच रहा हूँ तो मेरे को 15 रुपया बन रहा है. I will keep the same example of 15 rupees. Okay, improves my product, identify if your product is overpriced or undervalued, and you can optimize it accordingly. When you are going into the market, as I say, pricing we discussed in the first slide, right? And that's why I said I've changed it a little bit, because once you have set up the price, that defines your unit economics, and then you can identify, oh, whether I can increase my price if it is undervalued, or I have to reduce my price, right? And it will also win investors confidence if the LTV to CAC ratio is within that 3:1, which is called as the golden ratio, and we will understand how we will calculate that. The bottom line is you have to master this unit economics to have a sustainable growth. As I say, it's profitability per unit, builds up investor confidence, continuous optimization, and balanced growth. So this is needed. Please understand that. Don't run away. As I say, simple terms hai, just calculate karna hai inko. CAC, again, what is meant by CAC? Customer acquisition cost, primarily more relevant for businesses जहाँ पे हर एक कस्टमर को एक्वायर करने के लिए we spend a lot of money, right? So assuming it is a D2C brand, can someone write in the Q&A box which kind of businesses are you in? Which kind of businesses are you in? Can please everyone answer that? Clean tech, okay. If you can be specific. So Saptarishi, is payback period is equal to break-even point? A little bit maybe, but I'll just share the formula with you in a while. Not exactly the break-even point, because break-even period happens prior to the payback period. Because here I'm talking about payback period is primarily the investment which you are doing. So that is when you are able to return it. And break-even point is primarily when you are using it for revenue basis. It's a revenue concept, and payback period is a capital concept. So I'll come to that point later. Clean tech. Okay. And what are other businesses? Only Saptarishi is typing. What about other people? What kind of businesses are you in? Because if you are in a business which is more focused on D2C brand, I'm sure all of you, a lot of your businesses are not a Insta type business. You're not getting your customers from doing certain kind of marketing on Insta. You may be putting reels to create awareness about your product, but I'm sure none of your businesses are those businesses wherein you are generating your customers from the customer base, either through Google ad, Insta marketing. If that be the case, in that scenario, customer acquisition cost gains prominence, which typically means that if in order to get one customer, I am spending 1,500 rupees, assuming in my example, someone else is also writing. Let me see. Sorry, I'm kind of just interrupting. Family tech platform, C2C marketplace. Oh, we have marketplace, specialty tea for wellness. Okay. So B2G, B2B is there. B2C also I can see, C2C marketplace. So let me just speak about the product then. So yeah. So customer acquisition cost, as I say, is not very, very relevant for companies which have a big manufacturing unit and are producing products which are heavy in terms of the per unit pricing, assuming 2 lakh, 3 lakh, 4 lakh, because I'm sure you will not get customers on Insta or Google, right? Of course, you may have different platforms to run your ads, but definitely you're not going to do that. In that scenario, what you really got to do is you have to figure out what is my customer acquisition cost. As I said, 1,500 is your customer acquisition cost. Going by the same example, if you are selling your product at 100 rupees and spending 1,500 rupees to get a customer of 100 rupees, is it viable in a prudent manner? Is it a viable option? Tell me yes or no. Is it a viable option? Should we do that? Should we do this? 100 रुपए का सामान बेचने के लिए मैं 1500 रुपया खर्चा कर रहा हूं. Is it okay? Should we do that? What are the time when I should be doing that? Tell me. Please tell me. I want to hear your views. Is it a right thing to do? Are people writing food ingredient? Not always. So Saptarishi is writing not always. Yes, it is not always the right thing. Maybe you can start when you are creating the brand awareness or creating that awareness or your marketing perception, because you're just launching your product. It is okay because there are less customers which are coming in. Therefore, your CAC is higher, and maybe in 3 months, 4 months time, this CAC will reduce to 50 as my number of customers will grow. But for assuming after you start the business, after you launch the business, after 4th month also you are spending 1,500 rupees per customer for a product ranging 100 rupees. Is it viable? No, I don't think it's viable. And that's where the burn thing arises, right? A lot of D2C companies, they say we are burning. Their primary burning is on marketing, which ultimately is not culminating into revenue to a similar extent. So please be aware that you have to be very, very conscious. I am someone who's very frugal in terms of spending money, in terms of realizing that every penny I'm spending needs to give me a return back. I'm a Marwadi, married to a Gujarati. So and you all are businessmen. And as a businessman, we all have to think in this manner. It is not our money. If it's our money, we can splurge the way we want to, but this is a business money. Every penny we are investing should give us something in return back. Maybe after 2 months, 2.5 months, you should have that clarity in our mind, but it cannot be zero after 2 years or 3 years. You can't say, I'm still burning, unless you are in such an R&D company wherein the gestation cycles are pretty longer. You are actually disrupting the industry by your innovation. I can say you can do that, but otherwise you should not. So as I say, we spoke about these 3 channels. I spoke about Instagram, Google ad, and a referral program. Which do you think out of these 3, I put in the cost $50 CAC, $20 CAC, and $80 CAC. Which do you think, assuming everything remains the same and you are getting same customers from all the 3 sources, assuming Google ads, you're getting 100, referrals, so you're getting 100, Insta, so you're getting 100. Which is a better way, which is the best way to acquire your customer? Can someone please write that? I mean, I just wanted to make it more interactive, because finance after a point in time becomes little jargons and I'm talking. Always referral, Instagram. Siddhant is writing Instagram. So based on your product, you have to decide which category you got to enter into, which is very important. Saptarishi has said referral because it is only $20. Agar, as I say, the underlying remains the same. Agar sab cheezein same hai aur mujhe har platform or every manner, हर एक Google ads से, Instagram से, referral से, I'm getting 100 customer, it implies that then I should definitely be using referral as a methodology. However, someone may question, ma'am, that is okay, everything underlying is the same, but I know that I can generate more traction from Instagram because my product is such that then I will say have a combination of Insta and referral program and spend that money accordingly, so that you're not kind of missing on to the exposure about your product on any channel. Also use Google ads. But I think after the AI has come in, so Google ads and Google SEO search engine has lost its relevance, because whenever you put anything on the Google, right, so half, 3/4 or more than half of the page comes with the AI, right? So typically earlier what used to happen is कि सबसे ऊपर 10 कंपनी के अच्छे नाम आ जाते थे. So अरे this is the company, oh, this is Ednovate, this is perfect in this is this. But right now, the first thing which we read on the SEO of Google, in spite of spending so much money, is about AI. And we read the AI, we are very happy, we don't even see. So SEO has lost its charm. People are spending a lot of money on that. But I will say, stop doing that. In fact, invest more money on Insta, invest more money on your personal branding. If your product is related to yourself, right? If assuming you are making certain great product, invest in your personal brand. Instagram is always good, here and there, reels, yahan wahan karo, because everybody is there. But I think this is very important. When I talk about CAC, I've actually understood the entire की प्राइसिंग कैसे होती है, लाइक्स पे क्या होता है, इट इज पर क्लिक पे अमाउंट क्या होता है, बिकॉज अल्टीमेटली इट इज अफेक्टिंग मनी गोइंग आउट ऑफ माई पॉकेट. सो यू समटाइम्स यू हैव टू बी लिटिल क्यूरियस, एंड आई नो one person cannot do it all, but just try learning. Instead of a lot of times you scroll reels a lot, spend that time to understand what the dynamics is all about, what's going on. So as I say, it's important to understand CAC. As I say, it's nothing, whatever you are spending. So what you have to do is you have to figure out. So someone may ask, ma'am, calculate kaise karna hai? Assuming you have spent 10 lakh rupees on your marketing plus branding, plus sales activity, plus your sales. If you have a sales team, you have to add the cost of all these people. Okay. And assuming that amount is 15 lakhs, 10 lakhs is marketing, balance is branding, sales team, this, that. 15 lakh divided by the number of customer which you have. Assuming you have, let's say, 1,000 customers. So 15 lakh divided by 1,000 is CAC per customer for me. This is simple maths. There is, as I said, there is no rocket science. There is no great differentiation integration formula which we used to have in 11th and 12th. No statistics which we require. This is how you calculate it, and then you figure out whether for your product it is making sense. If you're selling a product at 5 lakh rupees and your CAC is like 15,000, bingo, please go ahead and do it, because you are earning 5 lakh rupees by spending 15,000. However, if it is reverse, then I would suggest you to look into that strategy after a period of time, because everything doesn't remains the same. Understanding LTV, again, very important concept. LTV का मतलब होता है lifetime value of a customer. What does that mean? It means if you are making a product, so assuming I take soap as an example because that's a product which are fast moving, or a cream, right? If you are in those segments, which I'm sure you are not, but if any clean tech company is trying to make some product which is environment friendly, eco product, and which doesn't pollute the drain system, because ultimately everything from Harpic to everything is going into the drainage and polluting the water, right? So if it is some eco solutions which you are coming up with, in that scenario, what is the lifetime value of your customer? Which means if your product is a product which people are replacing every 3 months, okay, LTV is also related to the loyalty, which is not unheard of in today's generation when we have Gen Z as a customers, or people those who shift the moment there is a change in 10 rupees pricing of a product. But having said that, lifetime value, as I say, assuming it's a soap which you are producing or any eco-friendly product which you're producing, how long do you think your customer will remain with you? Assuming the value of the product is 100 rupees, customer buys that product every 2 months. So in a year, the customer will going to buy that product 6 times. Okay. 6 into 100, 600 is per year is what you are earning from that person. If you think that my product is so good that the customer will going to remain with me, and he or she will going to remain with me for 10 years, so lifetime value of customer for my product is 1 year we said 600 into 10, which is 6,000 rupees. So if I'm spending only 100 rupees to acquire that customer and the lifetime value is 6,000, again, bingo, I'm in the right place. I'm doing the right things because I am not breaching it. But earlier example, which we took, that the product price is only 100 and I'm spending 1,500 rupees to get a CAC. Right? In that scenario, even if my lifetime value is 6,000 rupees, I am wiping that off in the first year because my CAC is very high. And the ratio dwindles to less than 1, which is not a great ratio to be in. Right? When I say ratio, it's typically you divide LTV by CAC. So LTV by customer segment. So it's typically, as I said, the total revenue from a customer during the entire relationship with your business. So you can have premium customer, you can have basic customers. So I think I've kind of discussed this entire slide. I pause for a minute. If someone wants to go through what is written, they can. Else I'll move on to the next slide. Are there any questions, ma'am?
Yeah. Does LTV also include after sales service costs as well as consumables?
No, it doesn't include after. See, as I say, it depends upon the business. If this is something which is typical of your industry that you will provide it, and it is part of your pricing, okay? You will say 100 rupees after sales services is included, right? Then it is part of the LTV. But if you're charging separately for that particular thing, right, then it is not part of your LTV. You're getting my point? Saptarishi, did you get it?
And also, when we calculate LTV by CAC, do we need to include the same time period?
Sorry, ma'am, I can't. So, Vatsala, what did you say? Sorry, I can't hear you.
When we calculate LTV divided by CAC, do we need to include same time period?
No, so LTV is for the lifetime of the customer, right? So customer may be there with me for 10 years. I'm assuming that. So it's an assumption which you are making, that the customer will be there with me for 10 years. He's buying the product with me, churning is, as I said, 6 times. right? 600 rupees per annum, and in 10 years, it is 6,000 rupees. In order to acquire that, see, I will acquire a customer once only, Vatsala. Once you buy my product, I will not be spending that money again and again. You are an acquired customer, and then I have to retain it, right? If I'm not able to retain it, then what is called as a churn rate, which means my customers are moving out from my basket, assuming someone else come up with see how the war happens between Swiggy, Zomato, right? Jahan pe sasta milta hai, customer wahan se buy kar raha hai. So they are neither loyal to Swiggy, they are neither loyal to Zomato. Take a great example. I think everybody would have, specifically people from tier 2, tier 3 cities would have experienced this. Uber, Ola, no services in tier 2, tier 3 cities. Suddenly Rapido came in. Everybody is booking. With that momento, they even took a better place in tier 1 cities right now. I don't get an Ola or an Uber as quickly as I get it in Rapido. Did they have a first mover advantage? No. Were they doing anything innovative? No. What they were doing, they just changed few things. They replicate what is in existence. They figured out what are the loopholes, what are the pain points of customer. They गाड़ी नहीं आती है 15 25 minutes तक. They said गाड़ी in 5 minutes. Wherever you are, 3 minutes. So this is the pulse. They're not doing anything new. Sometimes you have to see. Always you don't have to do anything new. Sometimes what you really have to do is figure out are there any problem pain points in the process also. Rapido only changed the process. PIN, I think Uber ne and Ola ne also, they have now done it, but Rapido is the first one to do that. The PIN is same. Everyone has their own unique PIN. It's like your PIN ID, right? Which every time you have to see what is the PIN. Now, after 5th ride, you remember your PIN and you don't have to go onto the app again and again. Specifically for older people, right? Because they can't remember, they don't have access. So you should have that consciousness about your product ki bhai, what am I selling, to whom I am selling, how. So it's also your marketing branding strategies. A lot of times it's not only the product, either your product has to speak, your process has to speak, or you're so good enough ki you brand it so well, package it so well that it's selling it out. And which is why I said a lot of time it's perception value which you get. Product 50 rupees ka hota hai, abhi LV ke bags again, we can get all these are inki costing is like normal, like a normal bag na, stitching hi ho rahi hai na, there is nothing else which you are buying, right? Again, talking about clean tech sustainability. But you know, in the market, the price at which they are being sold at 10 lakh, 20 lakh, 15 lakh, 25 lakhs. Why? The same bag, I am sure, would be made in Dharavi also, which is a Mumbai ka biggest area where a lot of manufacturing happens, right? And it's just that the moment the LV tag is being put in, the same bag is 10 lakh. First copy bhi to milta hai uska, which may, first copy itself comes at 2 lakh. फिर उसका third, fourth, fifth, sixth copies. I'm talking very generic with you guys because it's important to understand that it's the brand value, the perceived value for which you are paying the money. Right? Of course, there may be certain quality, better parameters, but theek hai na, who carries the same bag for like 10 years, right? I need 6 bags. I'm okay buying like different bags which can be at XYZ price. So I'm just trying to tell that this is something. So to answer your question, Vatsala, it's not the same period. It's the LTV is a larger period, and my CAC is like एक बार acquire कर लिया customer को, तो then I'm assuming he or she is with me. If there are any further questions.
Yes,
yeah,
one
sure.
question. What is the most underrated hidden cost that people forget to include in their CAC formula?
What is the most underrated hidden cost that people forget to include in the CAC formula? I think the sales, the employees cost, which are part of your the employee base who are working with you, because we take the marketing cost, we take the branding cost, but a lot of times people tend to say, you know, they're the same employees, and they're working for XYZ thing also, this thing also. Plus, a lot of time we don't apportion the cost of how much an individual, a founder or the co-founder, is also acting as a brand or a marketing agent for the company, right? We never add those costs, right? And it's like the HO cost is not apportioned for, right? Let me put it this way. So I think these are the hidden costs. Otherwise, it's very simple. जो भी आप खर्चा कर रहे हो वो डालते जाओ marketing के अंदर, branding के अंदर, whatever it is. I think employee cost, a lot of time people don't put in, or they do not want, and they just take the marketing में कितना खर्चा हुआ है वो ले लेते हैं. But as per me, that's not the right way. The right way to also include the cost of your sales and marketing people, those who are there in the field doing that job. You have to add and then divide it by number of customers.
Sure, we can go ahead.
Yeah, so I'm just moving ahead. So again, this is something which kind of I created, we have spoken, but I'll still read the total marginal profit a customer generates over their entire lifetime. As I said, 6,000 rupees, 1,500 is the CAC assuming. So 4,500 is you're generating over a period of time. It's profitable. Bingo, you're doing the right thing. Now comes to a very interesting concept, average revenue per user per period. So you just have to, it's like, kitna revenue आप earn कर रहे हो उससे per user per period. I've just taken that example right now. 2 months में बाय कर रहा था वो छह बार रोटेट करेगा आपको वो and in a year you will he or she will spend 600 rupees, right? So this is the cost of goods sold. I think everybody is being talking about the direct cost of producing goods and services, which also includes certain fixed costs. So COGS includes the direct, variable plus direct fixed cost. Lifetime, we have again spoken about it, and forecast a finite window, as I said, 3 years, 5 years, 10 years, based upon your product. If it's a fast moving product, of course, you can't say 10 years tak banda mere sath loyal rehne wala hai. But if it's a product which is something like a washing machine or anything, I'm just taking those examples which have a longer shelf life. You know, if they're very happy with jinka khud ka life period hi 10 years hota hai. I know after buying Samsung or Whirlpool or any other brand, I'm very happy with that. I'll continue buying that brand. So that is where the customer loyalty come in, or an Apple iPhone or a Samsung S26. People are very driven. Oh, I am an Apple fan. Oh, I am a Samsung fan. So you have to have a definite window, and also कि वो product कब change कर रहे हैं. What is the life of the product is also equally important. CAC and LTV, as I said, total channel spend divided by new customers acquired. As I said, a lot of people just take the spend, which is the marketing cost, which I personally never do that. I also include always the sales and marketing personal cost, which is very important. So this is a simple formula. I've spent 5,000, example 500K on Google Ads, 500 customer. So 1,000 is a CAC for me. Now, LTV by CAC ratio, which I was talking about, 3:1 is the golden ratio or the benchmark ratio. LTV by CAC, which is greater than 6:1, is under investing in a growth, and less than 1 is you're losing money on every customer. So please figure out how you can make it towards 3:1 or better ratios. Do you think you have to work towards building a brand loyalty with your customer to have a better retention rate so that the customer lifetime value increases, and thereby the amount which you're earning from that customer increases? So LTV is very closely connected with what we called as a churn rate. Churn rate means churn rate and retention rate. So as Vatsala was asking me कि मैम वो same period होता है कि नहीं होता है. So assuming today you are buying, let's take for example any product which you are buying, and later you want that, oh, I don't want to buy from ABC, I want to buy, so let's say Lux or Little. These are two soap brands which were there in existence quite some time back. So if that be the case, then you know that was okay, today I'm buying Little, tomorrow I'll buy this. So your churn rate is pretty high. People are not sticking to your product for some reasons, and you have to ensure that your product is such that you stick onto that particular thing. Churn rate, as I say, high churn rate is not good for the company, because you have to invest additional money to get a new investor, which is new customer, and you have to spend that money. So ensure that whatever customers you have acquired, try retaining them, try having referral programs. Of course, there'll always be the churn, but ensure that you have a lesser churn with these products. Very stage specific benchmark which is there in the industry, people say when you are at a seed stage, LTV by CAC of 1 to 2x is acceptable, because you know there's a clear improvement path and there's a product market fit which you are kind of figuring out. When you move towards series A, the CAC 3:1 is what is more important, and at a growth stage, people look at a 3 to 5x of LTV by CAC ratio, which also shows the strength and that your customers are retaining, they're not churning out. So very, very important. Even investors look at these parameters very closely, because a lot of companies are not generating profit. A lot of companies are just relying on the products which they are selling. So I think this is very, very crucial and important for all of you to understand. We have spoken about this. Understanding contribution margin and gross margin. So we have spoken about contribution margin. Gross margin is particularly for the entire company as a whole. So revenue minus your cost of goods sold is what will give you a gross margin. You divide it by revenue, you get gross margin percentage. It's simple. So we have spoken about contribution margin, we have spoken about gross margin, and we have also spoken about unit economics, profitability. So contribution margin, as I say, again, I'm not kind of repeating this we have discussed at length. Now, what is the difference between the three metrics? I think which is very important for you all to understand. You want to take a screenshot of this slide. Unit economics, revenue per unit minus your COGS, CAC, variable cost. You have to minus this and you will get your unit economics. Okay. Contribution margin you will be from the revenue per unit, you will be deducting variable cost per unit and not the fixed cost. When you are calculating gross margin, it's revenue minus your fixed and your variable cost plus change in inventory, if any, divided by revenue into 100, which is your gross margin. Again, if you want to calculate in percentage, you just want to calculate gross margin, I leave that to you. But for all, you can calculate in percentage terms also and just in number terms also. So what is the key differentiation between these? Why these are like, kyun zarurat hai? Someone may ask him. So very, very important. Gross margin, as I say, includes both. These are relative values. Contribution margin doesn't include your fixed cost. Gross margin does. The purpose of gross margin is primarily to ensure that there is an external financial reporting which is happening. Contribution margin is something which people typically inside the management of the company uses for pricing and product decision. And that's why I've taken contribution along with the unit economics when I was explaining. And strategic applications. So individual product and profitability and helps in calculating your break-even points, which is what gross margins do. And gross margin jo hota hai, it reveals the overall efficiency and profitability of the company. Common mistakes is underpricing to gain traction. I've spoken about it. Hidden costs, support, churn, returns. We don't take that into consideration. Scaling before proving unit economics, cash burn spiral. Because as I say, if you are not in a business which can sustain yourself, right, then you are burning. Ek din agar investor ne paisa dena band kar diya, so that to stop. But you have kharcha on the other side. You have expenses every month, and then you are stuck up. You will then start selling your every asset you have. Still, you are not able to meet again. So ensure that you're at least operating level pe you are profitable. I am not telling at an EBITDA level, but at least at the operating unit economics level, you're profitable. That gives a confidence to the customer that you will going to make this business profitable over a period of time. Understanding finance again. So I may pause, Vatsala. I think the time, I'm not sure how much I've taken, but I'll pause to take the questions because this again, I may cover the entire part of it. So I don't want to do that right now unless you give me that time, because I think we're already up.
Yes.
So 35, 40 minutes have been given. Yeah.
No, we took the questions also in between, so that's okay. We can have another 15 minutes with you.
Sure. If we can have that, I'm happy to kind of just tell them that, see, this is just the basics, right? That's not what is important. You have to see finance holistically. So I may start sharing again. I think I've stopped sharing. Just give me a second.
So there's a question in between. If our retention rate is high, but our CAC payback period is over 24 months, are we actually building a sustainable business or just a sticky but unprofitable one?
If our retention rate is high, but our CAC payback period is over 24 months, I think you are building a sustainable business because your CAC pay period, see, CAC pay period is not something which, I don't know what you mean by CAC payback period. The customer, are you talking about the LTV? I mean, I just wanted to understand that, Swetha, Shweta, and Anushri, are you talking about LTV? Because there is nothing like a CAC payback period. CAC is, in giving my same example, we talk about the LTV of the customer is 6,000. You acquire customer once. If the retention rate is high, you continue to have that customer. So from that customer over the lifetime, you are earning 4,500 rupees. 6,000, 1,500 is the CAC, then you are earning 4,500 rupees. So you are building sustainable business.
Yeah.
I mean, you can unmute yourself. You want to ask any further question. If I'm not able to understand it in the right perspective as you wanted me to. But having said that, let me just go ahead and I can continue. You can put it on a chat again, Q&A. So as I say that you have to understand finance holistically and not with just perspective of these jargons, because ye sirf ek chote, I will say, pehlu hai. In order to understand, what you really need to understand is that you have to set up smart goals. What are these goals for your business? These should be specific, measurable, achievable, relevant, and time bound. So something like you should say that my goal is to be a 100 crore company. So it is specific, it is measurable. In next 5 years, if you say next year, it is not achievable, because assuming you are today at 10 crore, you say next year I will achieve 100 crores. Either you are doing something great, you have done the groundwork. If not, it is not achievable, right? So specific, measurable, achievable, relevant, has to be relevant to your business. and time bound. So time bound is within the 5 years. So you have to have very specific target. You could have short-term goal, long-term goal, but always have, please put it on a piece of paper. The day I'm not writing my to-do list, I know that I will tend to forget something which I'm required to do. Because it's not that, of course, you set it on a calendar, you do a lot of things, you're all techies, but I still tell you the pen and paper always does the magic. The blackboards which we uses, because when you start writing yourself, your brain also start telling itself. And I think it's all about the manifestation process, which I think never happens on a laptop or on iPads or maybe Google calendars. So please write it down, because I think that's the paper you can pull at any point in time and tell yourself, oh, this is what I've written after so many. I don't know how many of you do journaling, how many of you do diary writing about your business perspective, what you want to do. Please do that. Matlab, this is what I want to achieve. Just write it on a piece of paper. Of course, a little gyan alag se from a financial topics, but this is what you do. Help you to achieve those plans. Matlab, I do that I want to achieve this turnover for my company. I need these many students. I need this. It gives me clarity. It gives me pathways to do that. So I think 3 financial statements which everybody is aware about: profit and loss, balance sheet, cash flow, which is very important. People do not want to understand these. And I think a lot of times someone asks me, where do we do mistake? You do mistakes in the cash flow part of it. See, P&L, balance sheet are accrual based accounting. Cash flow is something where you goof up, because you always think that, oh, we are profitable, but cash flow wise, you're not able to manage it. So managing cash is extremely important for any businessman, because I will tell you something very personally. I've been an investor turned entrepreneur, and sometimes I feel, why did I took that journey? Because I was at least I was free on weekends, maybe, or maybe on Sundays, where I could have my me time. As an entrepreneur, you're working 24/7, 365 days. You may have sleepless night. Even the dreams is all about what we can do better, how we can do it. And you have to ensure that the money should hit your employee's account, right? It should not come to me, but it should, every month it should hit your employee's account. And you can only do that if you manage your cash pretty well. And I think that's where a lot of people fail. That's why we are in that loophole or this vicious circle of raising funds, because kahin na kahin to karna padega, or there's a retrenchment of employees. Please manage your cash pretty well. And as I say, there is no rocket science. Inflows, cash inflows आपका कितना आ रहा है और outflows कितना जा रहा है. This is all about cash. And I'm sure accrual, तो I think a lot of people who are not from the commerce background will not even understand that. They may be doing only cash flow kind of accounting only for them. But ensure that you manage it well, plan it, have working capital limits from banks. Just don't be dependent on funding from investors. Okay, of course, if that is coming, great. Go for grants, non-dilutive capital अगर कहीं से मिल जाता है तो I'm a big propagator of that. Loans at a low rate of interest from from a government institution like TDB, BIRAC, DST, so many. I mean, like Ministry of Electronics also comes up with that. See which industry you are in, search for that. You have to be your own. You have to be your own explorer, I will say, as an investor. Ensure all of you have an MSME Udyam registration, please. All of you should have a startup DPIT registration, because there are a lot of benefits which are bestowed on people having Udyam and DPIT startup registration. You also get tax benefit out of it. So these are small things, but boss, you got to do this to ensure that you are safeguarded. क्योंकि जो market में 12% पे आपको debt rate पे you are taking loan, with TDP you can get it at 5%, because you are in that world of clean tech or a technology business, right? If they like your technology, you get a subvention rate of interest loans. Of course there's a process, of course there's a timelines, of course you will take some time, but कहाँ पे time में लगता है? बैंक से भी लोन लेने जाओगे तो वो भी 1.5-2 महीना तो लगाते हैं. इन्वेस्टर के लिए भी there's a due diligence process, you have to wait for 3 months. So why don't you do this? Why don't you chase money which is easy, non-dilutive, and help you to grow yourself? So I mean, this is something which I always want to tell to all my people, those who are coming for mentoring and all. I'm not getting into that. We have spoken about COGS, operating expenses, EBITDA. This is balance sheet. Please understand what are your balance sheet items. Again, biggest mistake which we do a lot of times when we are making P&L balance sheet is items which needs to be part of the balance sheet, because they are a capital item, always get stuck up in the P&L, right? If it's a long-term capital item, then it has to go to the balance sheet side and not to the P&L, and then you can depreciate it over a period of 5 years. So assuming you are investing in some an R&D, The Companies Act as well as the Income Tax Act allows you to defer it over a period of time. So अगर आपने 100 रुपया R&D पे खर्चा किया है, that means that you can put that 100 rupees in the balance sheet as an asset, and every year you can depreciate it by 20 rupees, and what you're depreciating should be part of your P&L. So what will happen is you will not get that hit of 100 on day one, and you will have a profitable business to show to your investors also. So please ensure, of course, I'm not telling you to do that. I'm sure you all have a CA, you all have a finance person or an accounts head in your organization. If you don't have, then I always tell people, दो लोगों से दोस्ती कर लो, आप entrepreneur बन गए हो, so that they can do your work in free. A CA and a legal expert. If you have a good friends in that segment, you just have to pick up the call and tell, hey, this is the problem. I'm telling you that will help you out. Become friends to a CA, to a legal expert. They are always very helpful, but you all need is their friendship, because you can't be spending a bomb because they charge on a hourly basis. So lawyers to आप phone pick करोगे, बोलेंगे हाँ भैया, I'm sending you the bill. I don't want to pay that bill, right? I want someone to be my friend and tell me, oh, this is the issue. How can I resolve it? I've stuck up in license. How can I do that? So please do that. This is extremely important. Cash flow, we have spoken about it. Receivable, maintain cash reserves. Always do that. Always have a cash runway of 5 to 6 months, please. Minimum, bare minimum. मतलब वो एक डाल के FD में रख दो कि इतना तो खर्चा ही नहीं करना है मेरे को, because this is something what you need, because the moment it becomes zero, you will stop producing anything into your company, because you need money to produce or manufacture or to do whatever you want to do. Revenue model, revenue projections for startup. Again, why revenue projections? I think very important. अगर आप सब funding raise करने जा रहे हैं, तो it attracts customers, guide strategic decisions, identify risk, and manage resources. But the biggest mistake which we do while making financial model is that our assumption itself is unrealistic. So let me go on to that. So key revenue assumptions to define. I think we have to do 3 kinds of assumptions, because it's a projection. It's not the past, it's the future which we are projecting. You have to determine your market size and segment, because we kind of say, oh, we have a, so your TAM, SAM, SOM should be very predetermined, and you have to work on the SOM part. That is an obtainable market for you. Out of that also, you can't obtain entire market. You may obtain only 10%, 15%. What is your pricing strategy? We've spoken about it. What are your sales volume? Okay, so assuming you are producing something 10 tons a day. So in a month, with 5 days of leave, you will produce 10 into 25 to 50 tons a day. What is your capacity? How much can you do it? Define, oh, with this capacity, with this money being coming, I can do this. Discuss on the acquisition and churn rate. As I say, acquisition is customer acquisition cost, churn rate is यार इतना पैसा खर्चे करके बंदा तो 100 रुपए का खरीद के कभी वापस ही नहीं आया, 1500 रुपया खर्चा कर दिया. So I am at a loss of -14. Ensure that your churn rates are very low. Keep track of seasonality and trend. So there are certain industries which are very seasonal. Their peak requirement comes in just 1 month. वो पूरा working capital ही उनका 1 महीने में लगता है. एक साल manage, like purchase करते और पूरा साल they kind of tend to give whatever the products to the customer. As I say, your revenue streams, be very clear in terms of determination of your revenue stream. B2B है आपका, B2C revenue channel है, revenue mix क्या है, geographic distribution. Age-wise demographics, because this is very important when you run Insta ad, because if you run an Insta ad for a product, which ideally should go to a person aged 30 to 65, but you run it for a person from 18 to 25, you have messed up with your money, right? So age demographic for your product is very important. What is the gender focus? Is the product for women or for men? Very, very clearly you have to specify this. What are the income brackets? Is it a luxury product or is it a low income product? What are the geographic markets you want to cater to? Plus, what are the states which you want to cater to, if I have to narrow down this? So I think please have that target customer persona in place. It's not that one, you may have multiple products, so have multiple persona. And if the multiple products are for the same persona, that is also okay. But you have to have this in your mind that, boss, I have to define my revenue geography-wise, my revenue stream-wise, which is B2C, B2B, B2G. B2G is business to government. So you have to have this in place, which is, again, as I say, very important. Again, these are revenue models. I'm sure none of you will be in any of these categories. How to make revenue projections? As I say, gather historical data. What are you doing? Conduct your market research. Define revenue stream. And as I say, you don't have to do this. You have to sit with a professional who will do this. He or she can only do this if you give them the right numbers. They cannot do it without that. calculate revenue and adjust for variables. So as I said, revenue projection is extremely important. Don't undermine your revenue or don't overshoot your revenue. Be very realistic and idealistic when you're doing revenue assumptions. So as I say, don't be very conservative. Don't be super. As I say, aaj 10 crore and next year will be 100 crores. In 5 years, I will be a 1,000 crore company. Wow. I don't think that will happen, right? It will not going to happen. So be very, very realistic, I will say, not even idealistic, realistic. मुझे लगता है आज मैं 10 करोड़ हूँ, next year I can do 25 crores, third year I can do 45, 50 crores, fourth year I can do maybe 100 crores, and in the fifth year I can do 120 crores. Possible hai. This is possible. But 10 crore company going to a 1,000 crore company, I don't understand those models at all. So once you make very realistic assumptions, once the revenue assumptions are plotted properly, that's the basic things. Once those are plotted properly, then comes your cost assumption. So direct cost is always a percentage of your revenue, right? So assuming your raw material cost is 10% of your revenue, it continues to be 10% of the revenue. Or if you drive economies of scale into the business, it may be 8% of the revenue. It will come down. It will not go up. Fixed expenses remains the same irrespective of the size of the business. If I have to pay a rent of 10,000 rupees for a factory setting or a lakh of rupees for a factory setting, I will have to pay 1 lakh rupees. Either I'm doing a 10 crore revenue or 100 crore revenue. The underlying assumption is that the factory has the capacity to take me to 100 crore revenue. If not, then I need to have another rental premises or owned premises in place to do the same. So as I said, once you have a very defined revenue assumption, you will have your cost assumptions also pretty well. Plus, there are certain things which you have to target for, like what we call as advertisement budget. That is something which is dependent upon you, how much you want to spend. Your marketing budget, your branding budget, because those are budgets which you have to internally decide with your team. Nobody will going to tell you. You can do less also, you can do more also. Is based upon at what stage you are in brand loyalty are you expecting, and you just have to do one calculation. If I spend 20-30 lakh rupees on any of the digital media marketing or any form of marketing, be it a newspaper, whatever, if I'm spending 30 lakhs, what is the return I'm getting on it? Please ask that question from anybody, from yourself also, or someone who is coming and selling you that product. Oh, SEO karunga, oh, ye karunga, main aapko dunga. Kya doge? Always have, whenever you're dealing with these vendors, ensure that there's always a percentage which you are giving them. Don't give them flat fee, because then they're not interested, and they may come and make claims like, oh, with 30 lakhs I will give you a 10x revenue, and you will feel, oh wow, that's great, I'm okay spending. Because when you say 10x revenue, you are okay, right? You think that I will get that kind of revenue, 3 crore a revenue. But when it doesn't come, you have lost 30 crores also, and you're not able to even do that cost benefit analysis. So please ensure that you do all those things in the right manner, have the right person who is doing it, because ultimately they will be asking questions from you, and you have to give them the right answer for them to put everything on that piece of paper. Financial model for startup, I think we have discussed all these things. Critical variables to model customer metrics, revenue, cost dynamics. This is how it should look like. We have spoken about this. Sensitivity analysis, of course, something which investors do a lot of time, stating that if the raw material prices goes up by 20%, what is the effect on my profitability? Right? So everything remains the same. Assuming 100 rupees is what I'm selling it, 10 rupees is my raw material, but suddenly raw material becomes 20. Then what is the effect on my profitability? Plus, the second question which you should ask is, am I in an industry which is able to pass on to the cost to the buying customer? If the answer is yes, you're not bothered. If the answer is no, then you have to take the hit, and your profitability or margins will come down, or you will also get into the losses. So whenever we are talking about big products, steel manufacturing, all they pass on to the customers, yarn manufacturing, steel, textile, clean tech, because they're big plants, right? They pass it on, because in the MOU itself, they say there's an escalation clause where they say that if due to increase in prices, there's a possibility of hike. Even see, all our B2G government projects of tenders and all, like, because the time frame, because of reasons, the bridge which is costing 500 crores sometimes become 1,000 crores because of time lag, certain issues and all. So escalation clause is always there. But assuming it's a product like a Cadbury, आज 10 रुपए का कैडबरी खाते हो, सडनली टुमारो आई कांट से प्रोडक्ट कोकोआ का प्राइस बढ़ गया and I have to sell it at 20 rupees, people are not going to buy it. So smartly, what Cadbury has done over a period of time, I don't know if you please do that, please read that, those stuffs. They've slightly increased the grams in the, वो 10 रुपए का ही मिलता है, पर जो पहले ग्राम आता था, X gram, they've reduced that gram over a period of time, not one shot, slowly. It's like 500 ग्राम के डब्बे में आप 400 ग्राम का स्वीट दे रहे हो, तो जो खा रहा है उसको तो 500 ग्राम ही लग रहा है, बिकॉज 500 और 400 ग्राम में कोई फर्क नहीं पड़ता, राइट? यू विल नॉट एबल टू अंडरस्टैंड की, बट उसने तो 100 ग्राम बचा लिया ना विद 500 ग्राम के डब्बे में 400 ग्राम का स्वीट देके. सो दैट इज एग्जैक्टली व्हाट कैडबरीज एंड दिस इज ऑल Banyas, Marwadis, Gujarati strategy to figure out how we can better off profit without showing it on the face of the customers that we are doing that, right? Everything remains the same. They have just decreased slightly the grams of the product. Why a solid financial model is important is built in investor confidence. As I say, when you bring it 10 to 1,000 crores, boss, I will say, please go back and revamp the model. I'm not going to look at this model. But when you come and give me a model with 10 crores, a proper project plans in place, geographic wise expansion आप मुझे दिखा रहे हो, किधर आपके customers आएंगे, कैसे आएंगे. If it is that holistic, I know there's a lot of mind which you have put into the thing, and then I will say, okay, great work, I am okay. So let's see whether you can do 120 crores or 100 crores. The discussion then stems onto that. Or are you capable with my connects do 150 crores? I will say, okay, I can also connect you to 5 people. I think with this plan, you can do 150 crores. So I think that's where the conversation will happen. So this is very important. Investors also get confidence because जब आप मॉडल हमें दिखाते हो ना, तो हमें समझ में आ जाता है कि whether the promoter has put in their brains or not, या फिर उन्होंने बोल दिया किसी को भी बनाने के लिए. The projection of financial model in pitch deck is also very, very important. So how do you do that? You do it. I mean, this is how I typically tell my company, target customer define kar do, B2C product and services define kar do, B2C hai, B2B hai, percentage revenue from each stream define kar do if there are various streams of revenue which you're getting, or geography wise bifurcation de do. The moment you do that as an investor, I know, yaar, this person at least know the revenue part. He's clear, he's sorted. I mean, I don't, हो सकता है आपका एक ही B2B हो, B2C हो. I am giving you the majority. If you have multiple products also, this is in multiple products, focus on your top 5 selling products, which is making maybe 80% of your revenue. मतलब और भी आपके अगर बहुत सारे SKUs है तो don't put everything, just your 80%, right? The Pareto rule 80-20 principle, just focus on that, which is giving you more revenue in terms, right? This is how your financial projection illustration slide should look like. A financial projection hai, not numbers, gazy numbers. What is the unit economics, fund raised, CAC, LTV, gross margin. So I will understand in one slide ki what is the business is all about. This is how if they ask you ki kya slider projection slide, this is the P&L you can work on. I mean, this is the revenue projection sheet which you can give to them, just added, because जो इसके पहले numbers हैं वो इसी sheet से आए हैं मेरे. So definitely if you have these numbers, you'll get these numbers as well. So let's build this together. I think I have come to an end to this particular session. I've just tried covering quickly a lot of things. If you have any doubt, any questions, happy to answer. I can see 3 questions. I don't have answered them.
Yeah, I have 2 questions.
Is there any?
Yes, 2 questions.
Yeah.
Is there any AI software, app, or platform that can help us specifically with financial modeling, projections, unit economics, etc.? Prachi, you have provided us a template, and we have to do a session on explain template.
So I will do the explanation session wherein I will physically do the numbers and all, maybe the way I explain to kids. I will do that. But there is no app or platform because you use Google LLM, you use Gemini, you use, so I'm sure everybody is using AI in this world, right? But I've always felt when it comes to numbers, so they're very good in creative writing. It is artificial intelligence and they are generative AI. So they generate things out of themselves, right? So they're very good when it comes to content writing. They will fit up to your things and stuff. Legal med, they're doing a great job, right? MOU, which take, and of course, the DHRP, the draft red herring prospectus, which takes 6 months and an army of lawyers, they're doing it in like maybe 15 days, right? An AI tool is doing it in 15 days. But as far as financial modeling projection is concerned, ultimately, number to aap hi ko feed karna hai na. I'm telling the assumption you have to make. Once you give the assumption, even a human can do it. You may say, human ko 5 din lag rahe hain, mere ko 2 din, matlab lesser time. But ultimately, there is no, as far as I understand, as on today, there is nothing like this which will give you foolproof things, because I have tried a lot of time In fact, for a few of I said, quickly give me the financial projection sheet. And it is so basic. I was like, oh my God, what are they giving me? Of course, if there are certain paid versions, you may get things, but I think we're still not there yet. AI in finance has come up, but how we can do that is something, I mean, you can use macros and all those things, but model nahi bana paoge. I think still model mein you need a little bit of intervention. And as I say, the assumption needs to be yours, Saptarishi. It's not someone else.
Yeah.
So when you are building something or the customer doesn't yet understand the category. So, okay. So when you're building something and the customer doesn't yet understand the category, more of a new business vertical. Okay. How do you anchor pricing without it? So I think, Kamesh, I think, so whenever you start, initially it's always you place your product with some pricing into the market, right? And after 1 or 2 months, you realize that do my product have a perceived value where people are putting it in a luxury category where even if I charge a 2,000 bucks for a 100 rupees product, they're okay paying that. Okay. Or am I in a category where I should not even be charging 100 rupees? My product should only be 80 rupees. But I think वो 80 to 2000 का variation तो नहीं आएगा अगर आपको आपका product पता. I just gave that example, a very two extreme ends. नहीं आएगा. So I think you have to put that product into the market for some time. And I always felt that the strategy is always that you always have a pricing of 200 rupees for your product because it's always MRP, maximum retail price. Right? If it's a D2C product I'm talking about, I don't know what product are you talking about. That's not clear. Though you spoke about BNI heritage. So I'm assuming if it's an eco hotels or eco villas, right? And if you're niche and you are giving some great offerings or some Ayurvedic spa or something, I'm just kind of just thinking aloud. Target segments are family business. It's a premium product, target segments. So if your products are family business, then you have to, sometimes you have to put in more price to a product to make it premium. I'm telling you this. So what I mean is if your product is 100 rupees, but you know there are people who can buy it at 5,000, put 6,000 rupees and say 1,000 rupees is discount. I'm offering a discount. So whenever you're launching a product, now always say 10,000 and it has to be supported by the quality of your product, please. You can't say it's a family, it's for this. And then you say that the product quality is very cheap. You can't then charge 500 rupees or 1,000 or a 5,000 product. So whenever we launch a product, now we always say pricing is what the maximum pricing which you want to put. We say offer is for limited time offer for first 100 customers. And you will figure out, लोग खरीद रहे नहीं खरीद रहे, खरीद रहे तो offer extended, नहीं खरीद रहे तो भी offer extended, because you want to garner employees and you will also understand the pulse of the market during that period. So I think it's all about hit and trial. Plus also see अगर similar product है market में तो वो क्या charge कर रहे हैं. And as you said, you're into family businesses, and I think family business people are okay paying X amount of money because they feel the more amount it is attached to a particular thing, the more premium it becomes. So I think it's okay doing that. Any further question, if anyone has, happy to answer.
I think we have no more questions at this point in time, but thank you so much, Prachi, for today's session. It's a topic which is very difficult for everyone when it comes to unit economics. But today, personally, I felt much simpler with the way you explained things here. And I think what really stood out was how clearly you explained the concepts like pricing, costs, and what founders should actually focus on while making decisions. So I'm sure we might have some questions. If anyone has questions, please put those on the groups you are part of, or you can directly share with me. I will try and fetch you the answers from Prachi. Thank you so much for your time, Prachi, and I will take your time for the financial modeling template.
Absolutely, yeah. And thank you so much, Vatsala. It's always a pleasure to be on your platform and to assist the companies. And I think it's always good to be here. And thank you, Vatsala, for your kind words. I think these kind words always makes me never say no to you.
Thank you so much. So really, I wish sometime we'll plan a workshop with you in Delhi or in Kanpur campus.
For sure. I may be traveling to Lucknow. So when I'm doing that, maybe we can club at that point in time. Somewhere in June, I have to figure that out for a FICCI event. So let's see. Yeah.
Thank you so much.
Thank you so much. Thank you, Vatsala. Thanks, everyone. Bye-bye.
Good day. Bye-bye.